Alright, so I just got off work. Tired as fuck, to be honest. Nonetheless, we are right here with it. We are right here with it. I got an entry right at somewhere right here. Let's see. I want to put that as a blue color. 90 coordinates, 59, 78. That's where I internet. NFPs today. I really just want to see price just break here, honestly. If price can get up there, I'll be a happy camper. I'll exit my trade and then I'll sit back and watch for NFP, you know? Because I'm down 700 for the account. I'm currently up about 600 right now just on this one trade. 645. So once we get about around that 800 mark, which should be about 30 pips, which should be about 61, should be right around that that liquidity area, that area of liquidity right here. And we're just waiting. You feel me? Excuse me. If it breaks past this, I'll exit because then we know it's no longer on that uptrend. Granted, it could very well just price lower. And that's okay too, if it does.
See what the lay of the land looks like after that, meaning what inefficiencies are still in play, what smooth areas above or below the marketplace. 15 minutes minimum after non-farm payroll hits. So that means 8:45 Eastern Standard Time, New York local time. That's when you have the green light to start going in and seeking opportunities. This stuff 45 Eastern Standard Time, New York local time. That's when you have the green light to start going in and seeking opportunities to study. If you're brand new, if you're a brand new student, you're a brand new trader in the making, if you will, if you have studied with anyone else, if you're coming to me, I'm calling you a brand new. Okay, because chances are you probably learned a lot of stuff that has absolutely no bearing on why price is going to move. So it's no question as to why you're losing money if you're trading on these days, because you're trying to do something that is.
Don't waste your time trying to analyze market trends. That's what VectorVest is for. Market
To be positioned ahead of it. So that's the reason why I tell my students, if you're brand new, don't trade after Wednesday morning, New York local time, on non-farm payroll weeks. And you can see Wednesday was a little bit of a challenging day. Thursday was a little bit of a challenging day. If you're new, if you don't know what you're doing, they can be very problematic. And then you're met with, obviously, the king of volatility for this particular week. It's the non-farm payroll. It's usually the first Friday of every month, 8:30 a.m. And leading up to that number, it can be a little unruly in price, meaning that it can start to consolidate and then create these little sharp little jabs above or below and go right back into consolidation again. And you can see pretty much that's what we've seen here. Now, there has been, for completeness sake, in my career and since I was doing mentorship with the Forex pairs, there has been non-farm payroll weeks where during the Wednesday and Thursday, very favorable price action was available, put it that way. But that's usually far and few between, so it's not the standard. So it was very difficult for me to try to teach this concept to new Forex traders because they're constantly looking to get into a trade. They're constantly trying to chase the influencers, trying to get enough money or get enough understanding so they can talk a good game and do mentorships and courses and whatnot. Because that's the fast money. That's the easy money. Getting someone else to send you money for education and you can talk in market replay. There's a lot of suckers that fall into that, but you have to know what you're doing. You have to know exactly how you're going to navigate these markets, because if you're put into the litmus test of having to do it live, explaining why the market should behave a certain way, why it should not behave a certain way at given times, that's prowess, that's understanding. Excuse me. The lack of that in this industry is obvious. You can really see it. But there's a lot of lipstick added to hide those types of things because of pomp, because of things purchased outside of trading profits and showcasing those things. So I just want to remind the young men, because that's usually who this is I'm talking to, you're not trying to become an influencer. You got to first learn how to be a good trader, because endless amounts of money, income opportunities will be afforded to you if you learn how to do this well. You can open up a path that you have no idea what's available to you. Right now, you're blinded by confusion and uncertainty, not knowing what to do. Just in your journal, do me and yourself a favor. Write in your journal that you have permission, you have ICT's permission, and give yourself permission to never trade this day. Never trade it. Now, months from now, after you've developed yourself into a well-rounded trader, you have a model that you haven't deviated from, you haven't tinkered with it, you haven't tried to change things. When you're getting consistent returns using that and you don't feel swayed by your emotions, then you can go into non-farm payroll after the release at 8:30, wait 15 minutes minimum, and then the rest of the day you can trade it normally. But it's important for you to prove that you have the willpower to stay away from this carnival ride, because every new trader, whether they're Forex, commodities, or futures, they all want to try to trade this day. And I did too. I wanted to, like, I saw a lot of movement. I was like, wow, if I could get that kind of movement real quick and sudden, that would overcome my fear and anxiety about staying in a trade, because it was something I wasn't willing to submit to. Putting on a trade and then having to wait for it to get to your target is agony when you're a new student. When you're a new trader, you want them to be just like my videos where I speed them up and it feels like, wow, I got 185 handles in 2.5 minutes. That's the trades I want. But it's not accurate. It's not a true depiction of what you're going to have to submit to. But watching the non-farm payroll, as you'll see in a couple minutes, it tricks you when you're brand new. It tricks you thinking that, wow, there's a way to get in there before that. No, there isn't. There really isn't, folks. And I want you to know that. I want you to understand that there is no consistent way for you to be positioned ahead of non-farm payroll with any measure of consistency that will afford you profitability. I mean that sincerely. I'm not hiding some secret technique, concept, PD array. I don't know, okay? I genuinely, in Jesus' name, I do not know how to call non-farm payroll before it happens. I don't. So I have to sit here and I have to wait, just like anybody else would, and see what do they do the damage on? What do they crush in terms of buy side and sell side? What inefficiencies do they trade to? And which ones do they leave? So I got a question about, what constitutes a minor buy side and sell side, and what is the primary buy side and sell side. So every single time I sit in front of non-farm payroll, and I don't do it all the time, or sometimes because I don't trade them really.
Tired of us starting small in the trading world? What if you could trade millions without risking your own money? Introducing E8 Markets, a simulated trading firm that gives you a shot at the big leagues. Here's the deal. You pay a one-time fee between $99 and $969 to test your skills in a trading evaluation. Prove your skills by making profits while managing risk. Pass the challenge and you get an E8 Trader account up to $1 million. Keep up to 95% of the profits you make with zero risk to your own capital. This is your chance to become a full-time trader fast. Imagine the possibilities. Turning your trading skills into a serious income, managing a large account, and achieving financial freedom. E8 Markets levels the playing field. Are you ready to take control of your trading future?
What we do is we pass your funded challenge for you in under 14 days, guaranteed. You don't even pay us until...
I have never reviewed with my students the number of how many jobless claims there has been and the change from the previous month. I could care less about that number. The market doesn't care about that number, okay? The market is a big casino, and they're throwing constant red herrings at you as a trader and as a speculator, as an investor. They're trying to cultivate and manipulate market sentiment with these things. That's why, fundamentally speaking, no pun intended, the pursuit of using that data on a short-term basis is flawed. Just like trying to use long-term interest rate trends for intraday trading is useless, because you could be in a carry trade market on a Forex pair where one interest rate in a country is higher than the other, and being long with that currency as the base, that would be a good long-term trade, holding on to it, because not only you're going to be most likely profitable in the direction, but you're also going to get interest bearing because you're having your money tied up in that larger interest rate currency. In that respect, obviously, it makes sense to hold on to a pair like that because it's going to yield better over time. But that doesn't mean that I wouldn't sell short that Forex pair if I was trading it. So these fundamental long-term perspectives, these macro perspectives, macro in the sense it's higher time frame and broad in scope. The necessity for all that stuff while trading is next to nothing for me. But it's wonderful instigation for other people that are less informed to make decisions where they put their money in our reach and we can take it. So just know that I am not looking at fundamental data. I never look at the raw data. I don't look at PPI number, CPI number. I don't give a shit what the FOMC rate announcement is. I never care to look at it. I don't ever care to look at it. And everything that you need to know is inside these little candlesticks. Everything that you need to know is right there, because what this is actually giving you is a real seismic graph of the market sentiment of less informed traders. That's what I see in price. I see stupid people doing stupid things with their money. And I'm waiting for the opportunity where I see something where they're arm wrestling me. And if they're arm wrestling me and they're willing to put their money on the line, I'm going to take that money. I'm going to sleep well at night. I'm not going to care that they lost the money. I have no problem. I have no Christian qualms about it because they signed the same risk disclaimers that I signed when I opened up my accounts. So they are aware. They know that there's a potential they're going to lose money. If they're foolish enough to think that they're going to be smart enough to get ahead of the marketplace in non-farm payroll, know exactly where it's going to go, and you can't enter a trade. You can't put a trade on right as the 8:30 news driver enters the marketplace. Try to put a trade in. You won't get filled. Or eventually, you'll get filled at the most inopportune time. With enormous slippage, that means where you're trying to get in at and where you actually get filled is way out of spec. So don't do it. Okay? Just don't do it. So now let's go through the liquidity pools. So we're here. We're essentially right here at 815. So we look back. We cleared this high, so that's not a liquidity pool. That high right there, it's a wick, but it's still high. So we dropped our level right there. And this is a close proximity buy-side liquidity pool, meaning this is going to be your minor. So you have to look for something above that one. Real simple. Top left, and we'll go to minor. All right, you ready? Was that hard? He complicates everything. All right, so going back from this area here at 815 or so, go to your nearest low. That's not a low, I would consider that. This right here, this is a minor sell-side liquidity pool. So you can do this. All you're doing is looking for the closest one at a specific time right before a news event. So easy. Even a child can do it. Speaking of children, I believe my son Caleb has passed his Top Step combine. So we'll be waiting for confirmation on that.
It's crazy.
Proud of you, son. Proud of you. But now you're at the party. This is the easy part. Getting there is easy. Staying there and getting paid out, that's the challenge because you're going to wrestle with the emotions. All right, so they have minor sell side liquidity and minor buy side. Now you have to take a little bit broader look above that. Okay, so we have this. Now look at what we have here. We have all this consolidation and all these little lows down here. On a news report day like non-farm payroll, they're going to go way outside what you think is reasonable. That's the problem with non-farm payroll. It's so uncertain, and they can go way out of spec in terms of average daily range. They can go outside of what you think it could go to. Oh, it can't. I don't think it's going to go there, and that's exactly where it goes. So chances are, when you look at the chart and you think to yourself, I can't imagine it going there. Ask somebody that doesn't know how to trade the chart. Okay, say, listen, if something really big happens, or so we're up or down, really fast, where do you think it would go? Like, in a spell there. primary is just the next logical level of liquidity below your near close proximity minor sell side liquidity, which is this low. And this is the minor buy side liquidity because it's close proximity to where we're at right now. There's no other high because we already cleared this one and we already cleared this individual candlestick there. So that means this is a minor buy side liquidity pool. Now, is that complicated? No, it's very simple. So, bottom left, and that's the business there. Now, here is the primary buy side. You think it's going to go just to fill in this. I'm going to submit to you that if it's going to go up here, it's going to run right on through to clear this. Why? Because somebody's up here short, and they think that they're safe because this is retail resistance. So this okay. I promise I've been on TradingView before. And I love how it always likes to make it look like I don't know what I'm doing with this app. Or platform, I should say. Alright, so that is the primary. Primary buy side liquidity. Okay? So now, the next question is this. From a narrative stance, and I am generally wrong when it comes to non-farm payroll. So I want to remind you of this, okay? We have an obvious drop that was precipitous here, going down into a weekly target we were looking for inside that buy side and balance sell side efficiency, that blue rectangle. Go watch the first 18 minutes of Monday's live stream. If you do that, you'll see where that blue box came from, why it was important, why I believed it was going to go down there as a weekly target. As it hit it, we haven't done much at all, have we? That's pretty interesting, isn't it? So contrast that with how I told you to avoid Wednesday, Thursday, and Friday of this week trading. I told you where the market was going to go, told you why it was going to go down there, and it went there, and then it behaved like it did here. And even in this sloppy stuff, you saw I can trade. I can trade in this mess. You're probably not going to do well doing it. So because we have somebody that's already made money, and they're sitting in profit right now, non-farm payroll is a pain mechanism. It's used many times to destabilize, to mess up current sentiment and or unseat individuals and then go the other direction. So what could happen today is we could see it do some wild run up here, knock these individuals out, and then into next week go lower and not even take out these lows. That's something that could happen. Or it could go down because this is closer to get to this sell side, trip people short, and then rake it all the way across the coals and then pump it all day long up to get to here, and then go into the weekend where everybody thinks it's bullish, and then we start going lower next week. Or it could just do a little fizzing, moving around in here and leave both pools of liquidity, and I'm wrong and you're wrong and everybody else is wrong, and these get beat up. So
trading is not for everyone, but if you are a trader, plus 500 is the place for you.
I don't have that, but we're all going to watch it now. Okay, so these levels are here, and we're going to watch it on a 5-minute chart because it's a little bit more fun. 1 minute is too much to see it on a 1 minute chart. And here we go. Already moved 100 handles. And hasn't even been 20 seconds. So the minor buy side's been tagged. It'd be real easy for it to drop down to get the minor sell side still too. It's a little lackluster here. I was expecting a little bit more punch having non-farm payroll before the election this year. Okay, since it's slow, we will go down to a 1 minute chart. So on this first candle at 8:30, the low came in at 20,064, and the high came in at 20,162. Okay, so 98 handles in 1 minute. Can you weather that if you're wrong? Can you weather that with your 15 contracts and your over leveraged funded account challenge or your funded account? Can you do that? Because I'm going to remind you with common sense, you can't. Okay, so the first pool of liquidity they've taken is the minor buy side. So we're going to see, do we have any interest that go below and get that minor sell side? It's not important to look at the individual candlesticks. So don't complain. Like, come on, you're too zoomed out. I want to see fair value gaps. That doesn't happen here. You're looking for the liquidity. For the first 15 minutes, you want to see what stops they run for above and below the marketplace. So this is accomplishing the method. You have your own chart you can look at. I just want you to submit to the idea of watching where it wants to reach for stops. You feel like you missed anything so far? Oh, I wish I would have. Do you feel any of that inside right now? Like, I wish I would have done this. I wish I would have done that. Or if you had a position and you carried it into this, did you get stopped out?
I damn sure
Are you
did.
making money right now if you carry a position in?
I'm sure not.
Are you willing to hold on to that trade still?
I'm not. It's already gone.
I would like to see it dive down and get that minor sell side from where it's at right now. Because they've already engaged the buy side. So, since it's kind of slow for a typical non-farm payroll, what I'm looking at is this. I'm viewing it from this perspective. Let me get this out of the way. The buy side minor has been hit first. There's minor sell side down here. Because it's a non-farm payroll event, you may look at these lows here and think, well, that's where my eyes would go, not mine. Because this low is already lower than that one. And this low is lower than that one. So I'm using this low and that low. That's what makes my liquidity pool, the first minor sell side. But I see this as the minor buy stops have been acquired here. And if this is the first side they go to at 8:30, someone could be interested in accumulating positions in here. And if they're running for buy stops with the idea that at a later time today that it could be potentially lower, where would they want to offload those? Below this low here. Or we're going up here, we're consolidating, accumulating to take the primary buy stops. I have nothing to frame that run on. I wouldn't want to take that trade, even though it looks wonderful in terms of the payout if you were to hold on to it. I would not do that. And it's still 8:35, so we have 9 minutes still. Now, looking at it normally, this is what the chart would look like when you're watching it with me. What have you, what have you seen here? A fair value gap trades down into 1 minute before. We rally to take the minor buy side. Okay. Watch the wick. If it clears this high, it would need to run aggressively and not spend any more time coming back inside this shaded area. If it's underlyingly bullish and it wants to run. Otherwise, if it goes up and fails and goes back down and trades below this, this becomes rather a potential inversion fair value gap. Because normally where it's at now, because it's a buy sign bounce, sell sign efficiency, and the market price is here, that means it would be normally expected to see it come down as a discount. And if it's bullish, this should offer a reason for the algo to offer that price and then reprice higher. But if it goes down through that and comes back up, that would be inversion, and we can use that to do a case study for the sell side down here. All right, so where we're at right now, it needs to continue. It should not ever come back down in here. Did you give yourself permission not to trade? I'm just reminding you. So far, this is actually a very timid and tame NFP today. I'm actually puzzled as to why they're holding it back here. I was expecting a whole lot more fireworks. Seeing that this is the last one before we get to our election. I don't think I'm saying that correctly. I gotta check my economic calendar. November 1st is Friday, so they could be using that for NFP. I may have been ahead of myself saying that, but now think about how in 50 minutes? 50 minutes, the opening bell in the stock market. If they are lifting price right at 8:30, all the way up to opening range, which is 9:30 to 10 o'clock in the morning. And a reminder, 10 o'clock, I'm breaking the live session. I have something I have to take care of. I can't escape it. So the public, if they keep sending this higher and they don't go down to the minor sell side at all, and we open up at 9:30, right here we're trading at 20,180 or so. If we go to regular trading hours, we're down here. So previous settlement is here, and we're up here. So that's a really large gap. What happens if it manages to climb all the way up there? We have an enormous gap. So is it possible it's going to climb that much? I don't think so. It would have been a lot more energetic by now if it was trying to get there. It doesn't mean that it can't still try to press it there throughout the day session and today and just leave everything as it is. Go into the weekend with a whole lot of lipstick on this pig, and people see that on the weekend. They'll read Barron's, they'll read all the Investors Business Daily, Wall Street Journal, whatnot. And all the talking heads will say, well, the market's really strong because the employment data was this, that, and the other thing. And then next week, we start seeing underlying weakness. I'm not trying to pick the top. I'm just saying that I'm not trying to pick the top, but I'm also not trying to be a perma bull either. Because we're in that really weird place, technically and seasonally, for the market to do so.
When the place smells delicious, but you need help with the menu, download the Google app. Just
And I suspect next week we're probably going to have one. So here's some chicken little stuff for you. The fair value gap in here, that's one that you want to have on your chart. Note that one. But this one here, right on the jump of non-farm payroll, because it was the candle that starts this big carnival ride, if it comes back below this, this is the one I'd like to see definitely as a inversion fair value gap to run down to here. But nothing in here is giving me any reason to be a buyer or seller yet. Now, as a young man, I would look at this and say, wow, I could have went long right before that happened, and I could be up almost 120 handles or so. And I would literally convince myself that I could find these setups beforehand. And every single time I tried, regret. The times I was right, it would stop me out. And then it would run where I wanted it to go. So it's something that I mentioned many times, that an opportunity in the wrong conditions, an opportunity is a cleverly disguised impossibility. And that's what I want you to subscribe to in terms of expecting setups before non-farm payroll. Before 8:30, non-farm payroll Fridays, hold no bias, hold no expectation over price. Allow price to show you what it has after. And we have 1 more minute and 15 seconds, and then we can start looking for what's available for price. This is the best orange juice I've ever had. Wow. Sometimes you get a glass of orange juice and it's like basically battery acid. It doesn't taste like anything but acid. The last batch of this we had was kind of like that. And this one here is very pleasant. Sometimes you get good oranges and sometimes you don't. Orange juice, it's just... For a long time I wouldn't drink it. Back in the 90s I got my first slab trading orange juice futures in the option market. First trade like that, and I lost half my money. All right, 10 seconds. All right, now it's been 15 minutes after the non-farm payroll release. So you want to go through your charts and see what is left. Going back through price here on a 1-minute chart. Okay, nothing really to speak of there. You have to go to a 5-minute chart. I mentioned this down here, so I will already have this on the chart in the event that it does trade here. My interest in that is not to see it come down for a buy. I'm not looking at it like that. If it goes down there, I want to see it trade down through it, come back up, treat it as an inversion fair value gap to ride to minor sell side. That's where my interest lays right now. I am not arguing and I'm not fighting what it's doing here. I'm just not interested because right now it's in an area where it's no trade for me. It's straight from 8:30 right on up. So what is this to me? In my mind, it's a Judas swipe. I'm looking at this as bait. I'm looking at it as John Q. Public. He just got done reading, a couple books, Elliott Wave, Pitchforks, Dow Theory, Wyckoff. He's watched some supply and demand videos, and he's looking at this and he's thinking, wow, this is a bullish market. Like this is clearly going up. So they're going to look at indicators. They're going to plot their little moving averages. They're going to put pivot numbers on. They're going to look for anything and everything to get in this to go up. And the other ones that are just looking at this, they're just simply going to put a buy stop right above this candlestick here. And if it goes up there, they're going to get tripped and go long. So they're just looking for any excuse to get into the market long. From this candle at 8:30, that low to this high has been one straight direction. No stop run, no candlestick taking out any trailed sell stops for anyone that would be long, because no one could get long. So all of this is just building in a premium ahead of the 9:30 opening bell. There. And what I'm anticipating is I want to see us inside that 30-minute interval of time. I want to see some reason why during this 30 minutes, but it could happen before, I want to see it trade down into this let's leave it as it was. We'll come back to it. Minor sell side under here. I have the pups kenneled, and they're next to me. And if I leave the room, because my wife's out shopping right now, I can't live stream because they'll be howling and barking, and it'll distract me. So you're gonna hear them moving around. They're trying to still get my attention. But I see this as just basically pumping it up, providing a premium. Now here's where I could be wrong, and I'm completely content with being wrong. They could just keep pushing this higher to run to this as the daily objective, and that's it. That's the objective. I will look at something inside of the 9:30 to 10 o'clock opening range and see. I trust that if it doesn't get there before then, and it is in fact trying to get up there, between these two time points, I have confidence that I would see something in there that would afford me an entry idea that would deliver from there up to there. If this is in fact what's going to happen. Where I have to let go of the marketplace and potentially miss a move is waiting for the opening bell. Because it could just keep on going up there. And it's a move that I just simply missed. And it's okay. There's lots. I don't trade every fluctuation. The other day when we were doing, I was teaching you how to trade volatility pinball, which is just a execution drill, just conditioning yourself, taking every single fair value gap, every single one of them, and running for the nearby high or relative equal high, or the nearby low or relative equal low, and just doing that all session long until you get around 10 to 15. Or if you got time to sit in front of the charts all day long, take a couple breaks throughout the day, get some circulation in your legs and whatnot. Do as much as you can and have fun with it. And you watched, let's just say that was a $10,000 account and trading with one contract. That's 38% that was posted doing just the drill. So there's lots of setups that are available, and the NASDAQ is going to move over 650 handles today. It's going to move over 800 handles today. It's going to move 1,000 handles today. Before it closes, it's gonna move that much. Now, to the novice, to the neophyte, they hear this is gonna go up 1,000 handles, and it's already people typing up stuff going in their personal messages, direct messages. ICT saying it's gonna move 1,000 handles today. Up. I didn't say that. Others are gonna say, ICT said NASDAQ's gonna drop 1,000 handles today. I didn't say that either. I said NASDAQ's gonna move 1,000 handles today before it closes. Don't believe me? Be long when it does a 30 handle retracement lower. Get squeezed out, close the trade. Go short thinking that's where it's going to go, and then ride a move that goes up for 50 handles. We're already almost at 100 handles. And then it's going to do this back and forth, all afternoon. On a 1 minute chart, on a less than 1 minute chart, that's happening all day long. So 1,000 handles is easy every single day, even in small range days. So there's never a short supply of opportunities, but there is a very short supply of high probability, high yield, low risk setups in a day. Those are not ample. There is an ample supply of that. So you have to be a little more selective. And on a day like this, you have to submit that you're going to probably miss a move. I'm not going to chase a day like this. You've seen, I think, 2 times now since we did 2024 mentorship, since I started teaching with these principles. You've watched me sit in a live stream and explain how if it keeps going up, it's going to go without me and it's okay. And I have no anxiety. I have no shame. I don't have any kind of regret. I don't feel like I don't know what I'm doing. I'm not thinking that, the viewers of this stream are going to think my concepts don't work. I don't think that at all. I mean, it doesn't matter because even when I do trade them and I'm pushing the button and it works, some people will still say they don't work. It just happens that I got lucky that day, right? But moves like this where it's just one-sided, it just keeps going.
Translate entire websites.
The only setup. This isn't the only price run for today. It just means that this is the one that everybody else is going to focus on. And they're going to build a case around whether or not they're a good trader, or anyone that doesn't take that trade and didn't take it with them, they're not good. Or if you didn't take this trade, you're a loser. If you didn't get along on this, you're a fool. Something to that effect. Where I'm sitting here trying to be a voice of reason and tell you, there's nothing in here that I would have been long on. Nothing. Because the risk is too prevalent. And I don't want to just take risks just for the sake of saying, I got in on non-farm payroll, which is what most new traders want to do. They want to be able to say, like, it's a badge. Like you're all part of the Boy Scouts and you get that little badge, that merit badge. It says, I survived non-farm payroll. I lost my ass and an arm and a leg, but I survived non-farm payroll. No thanks. That's not what I want to do. I'm not trying to cultivate that as an aspiration for any of my students. I want you to say, you know what? This is an interesting price delivery. I'm thankful I'm not part of it because I wouldn't be able to trust where the stop loss would be. Because have you considered that? Where would your stop loss be? Say you wanted to chase this and go long. Where are you going to place a stop loss that you can trust that it's most likely not going to hit it? I don't have one that I can hang my hat on and say, yeah, I feel confident. I feel fairly confident that the market couldn't retrace down to get my sell stop based on this, that, or the other. It's nothing that I can do that with here. Because this is a one-shot rate from the opening at 8:30. And it's just gravitating towards where I said the traders that are holding the profitable positions. Let's go back out for a moment. Remember I was saying to you, most of you that see this big sell side imbalance, buy side efficiency, Some of you were thinking when we were here that it's going to go up just to go in there. And I said, if they're going to go there, they're not going to be content with just going there. They're going to go to where the positions are protected. What positions? Anyone that was fortunate enough but not smart enough to have already gotten out of their short, they're entering inside this area. Anywhere in here, somebody, we don't need to know their name, we don't know need to know their social security number or where their geographic location is on the spinning globe. It's not a flat earth, by the way. The consolidation in here, we have to look at someone went short. So to be short and hold the position with a stop loss, it's going to be at least a very minimum above this high. And because this high is slightly lower than that one, this means this is what? A high probability, relative equal, high. So it's a prime candidate for it to be what? Taken. So don't subscribe just merely because there's an inefficiency here and think that, well, this is it. You know, we don't have to worry about anything else except for it going up to here. Because it's already done that. I subscribed to the idea at the beginning of the stream that if it's going to go here, why not just go up there where the actual orders are? Because this isn't going to have a lot of orders. Just trading back up to that candlestick's low, that's not a large pool of orders. The large pool of orders is resting at this high and this high, in this general proximity right here, watch. And that band right there, that's where the actual buy stops are. They're not at the top of the sell side balance buy side efficiency. The delivery to price is just being offered there for the purpose and mechanism of efficient delivery. It's not that there's a specific number of important buy stops there. The algorithm is just simply trading there. So the pools of the liquidity are absolutely at the highs and the lows. Okay, I had someone send me a comment that said, are there larger pools of liquidity that are not above old highs or not below old lows? No, there are not. The largest pools of liquidity are always absolutely above old highs, and that's buy side or buy stops, or below old lows, and that's sell stops or sell side. Anything that anybody tells you outside of that is grade A bullshit. Okay, they're all trying to twist something, create some kind of new theory, some new science, and they're just tossing things against the wall and seeing what sticks. And if they can get a following that starts having some view about some new thing, you know, that'll give them traction, and then they have a crowd, and they can milk that crowd for money. So, again, the market goes up just to reprice for the purpose of efficiently delivering what? The counter delivery to this down move, efficient market delivery, is that it needs to create a candlestick that does this. Down close candle, for me that's a black candle, and a green candle is a bullish candle on my charts. So it would be like this. It would deliver in the future some kind of a delivery where price is being offered going back up. We've seen that here, but that's not the end of the story. You got to think, why would it want to even go up here in the first place? Because it had inefficiency. It was only offering sell side delivery. That means movement lower. So if it's going to go lower, and the algorithm does two things. It reprices to engage liquidity. It doesn't know how many stops are above an old high. It does not know how many stops are below an old low. But
you want to know why our grandparents?
Let me show you.
where there are inefficiencies, where it's just one single candlestick that makes a range in and of itself, like an island, this one single candle before it, this candle, where that line is attached to it, this candlestick's low and this candlestick's high. This single candle has an inefficiency. It was sell side delivery, but it's inefficient in buy side. It means it hasn't offered price inside the time. Listen, folks, the time between this candle's high, that candle's low. The interval of time needs to be rebalanced with price. So price will go higher on the buy side delivery. It means overlapping the same price range between this candle's low, this candle's high. You are expecting in the future a pass right back up over top of the single candle. And once it does that and it touches this candle's low, this has been efficiently delivered. That is not a balanced price range. It just means it's been efficiently delivered. So, back to the discussion about why that's simply not enough. The market going into this area and offering efficient price and not taking a ride into these stops, to me, would be a rather interesting observation today, because this is where the actual orders are. There are no orders, essentially, that are outnumbering, let's say it that way, the actual liquidity that rests in these highs. The market driven down into that target we had in the blue shaded area, that's the weekly buy side balance, sell side efficiency. It delivered that, and it delivered it quickly. And then we did not make anything lower. So the individuals that were sitting with the largest form of profit that's still open, if they're holding the shorts, their stop loss orders are here. Not all of them. Most of them already been stopped out with this return back to that high, this spike taking out that high, and then obviously the non-front payroll today took out that high. But we're above this inefficiency now right here. So it goes without saying that non-farm payroll is used to disrupt what's already in play. What's in play? The shorts from here. Now, it could have very easily, from here, dropped down, disrupted these, and then made this the daily run. I would have rather seen that, to be honest with you. But as it is, we just started right at 8:30 and just started running right for this inefficiency. It's no longer inefficient now. It's been efficiently delivered. It is not a balanced price range yet. So we still have to submit to the idea that they're might be going to take us up into here. So it can keep us real close to where the inefficiency high of the SIBI, and the SIBI is this. Let me draw it out in case there are new people here. This is the inefficiency. And you can see how we already painted right over top of this individual candlestick. That one. Right here. And then we have all of this delivery right back over top of it. You see that? This is usually seen with one single candle. But in here, it took two. It's fine. Whatever it took time-wise to make this SIBI, you're always anticipating price to do the same thing time-wise. So between the interval of this candlestick's low to this candlestick's high, that same one single candle, you're always anticipating the delivery to be the same type of delivery on the other side. So that tells,